JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 6th of September 2022. So yeah, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can check out for more information about us. Now, I can see there in the chat room, good Uwe, yep, good morning to you too, good morning to everybody else who's joining in, so I hope everybody's having a wonderful start of Tuesday. Now let's jump into the charts. The first one I want to pick up here is Nikkei 225. We had a bit of a spike here, and so far I would say this idea of a bit of a rebound is working. However, let's not rush into anything. Today the US markets are opening up. However, I'm kind of leaning a little bit more towards the upside, to be honest, because we got a little bit of a boost from in China, so the government has supported the businesses, and in general the market sentiment, we saw the Shanghai Composite kind of rising a little bit, so maybe the European and the US ones could follow suit, could go, after that, maybe go for a little rebound. So we saw Nikkei pushing a little bit higher. However, I think that investors are still kind of on a little bit on the skeptical side here, and as you can see, they brought the index back down, and the index ended flat for the day. Now, that doesn't mean that, everything is now doom and gloom from here. No, it's just that it's a healthy trading, so everything is fine. Look, I mean, as long as we stay above those two EMAs, the ones that I was talking about, the 100 and the 200-day EMAs, together with the 27,524 territory right here, approximately around here, then yeah, we could see maybe a nice good push back to this 21-day EMA, and that's what I'm going to be aiming for initially. However, if we suddenly do drop through this highlighted territory right here, then yeah, I'll keep an eye on this short-term tentative upside support line taken from the low of the 20th of June. But if that fails, well, guess what? I mean, further declines could be possible, guys, here. The Shanghai Composite, so that's what I was talking about. We got a nice push back up, so I have to kind of admit that a few of the levels didn't really work out. So, well, that happens, because previously what I was talking about, I was saying that, look, if it stays somewhere below that 3,200 territory, then yeah, I'll continue aiming lower. And this is one of those moments where I have to admit it didn't really work out. So, but hey, that happens. I mean, so we have to kind of take that as a given. Now, let's see what we can at least try to do here. Now, previously, if you remember, a couple of weeks ago, I was talking about this potential idea of maybe seeing this one as a possible inverted head and shoulders pattern. It didn't really work out that way. However, if by any chance this starts climbing higher here, all the way back to this downside line taken from the high of the 20th of July, and then breaks it, now maybe we could get ourselves an ugly inverted head and shoulders pattern. However, I think in that sense we would just probably stick to an idea of a triangle pattern here, something like a veggie triangle here. But either way, in that case, I mean, if we are going to continue, let's say, trading around here a little bit, then I'm going to take a bit of a neutral stand. If this is the case, if this is going to end up being something of a triangle pattern, then as long as it sits inside it, I'm gonna remain neutral, and I'm gonna just wait for that clear exit through one of the sides of it. ASX 200. So okay, so we had a little bit of a push back up. We failed to reach the 6,894 territory, and we started drifting back down. Now, in a way, I'm still kind of sitting and keeping an eye on this idea of a potential maybe retracement here closer to the upside line taken from the low the 20th of June, and a test of it. And if it holds, then we could see a nice rebound and a push back up. Now, ideally for the upside, I would prefer to see a push somewhere above this territory right here, somewhere between the 6,943 and 6,951 levels. If we clear that, then yeah, I'll go a little bit higher. If we still hang around somewhere around here, yes, there could be some opportunities, but probably I'll take a stand away from all this, and I'll wait for maybe a more clear indication of what it wants to do further. But either way, for now, I'm kind of leaning towards this upside line taken from the low the 20th of June, and then if we rebound from it, then yeah, we could see a nice little recovery like that. But if we break this upside line, then now that's where yeah, more sellers could join in. The German index DAX. So yesterday declined, as you can see here, and yeah, it fell heavily. But look at this, 12,600 territory, approximately around here, did provide good support. We did rebound a little bit. So looking at the cash index right now, we'll see that the index is sitting at around 12,742, 40 zone, something below, a little bit below yesterday's close, but not significantly. So now probably as I said before, that look, if we drop below this 12,827, 28 zone, yeah, I'll go lower. My main target will be somewhere around that 12,400 level, so approximately around here. Now, to be a little bit more on the safe side, I'm not going to draw the arrow here because it's going to be very, very squished, but basically what I'm going to say here is that if we do drop below this 12,600 territory, now that's where I'm going to get a little bit more excited with further declines, and then I'm going to aim for that 12,400 zone, and then I'm going to go from there, guys. In terms of the upside, previously I talked about this 13,085 zone, but hey, I mean, it's not really an ideal level here. I mean, maybe we could keep an eye on this 13,052 zone, something like that. So that's the high of yesterday. Sorry, not yesterday, but Friday. So yeah, if we do push above it, then that might open the door towards slightly higher levels for maybe the path towards a larger correction here to the upside towards this downside line taken from the high of the 5th of January of this year. Now, long story short, for now I'm leaning a little bit more towards the downside maybe on this one, but I'll get more comfortable with lower levels if we do drop below this 12,600 zone. NASDAQ 100. So looking at this picture here, of course, yesterday the market was closed. The US market was closed, so we're waiting to see what's going to happen today. The cash index did move around a little bit, so not significantly. We're currently sitting at around 12,155 levels, so so basically above Friday's close. Still somewhere around here, below this upside line, below this downside line, but above this key highlighted zone. Now, what I said before, that if we do drop below this highlighted territory, then yeah, I'll go lower. At the moment, I am just keeping a close eye on this, and waiting for that clear breakout. DXY dollar index, guys. So yeah, a bit of a roller coaster ride here yesterday, and well, basically for the past kind of 2 days, 2 trading days, I would say, it has been on a bit of a wild swing ride here, and as you can see, the bodies of these daily candles kind of end up being flat. So I want to see what's going to happen. I want to see what's going to happen today as the U.S. market opens up again. How will this play out? But basically, just if we approach this from just a simple primitive way, or primitive primitive side. I would say as long as it stays above this highlighted territory, this 109.2930 zone, approximately around here, then yeah, I'll continue aiming to the upside. In terms of economic news today, we do get the ISM non-manufacturing PMI figures later on, so keep those in mind. From Europe, we get the UK construction PMI figures, and yeah, pretty much that's it. Oh, from the US, we get the services PMI numbers as well, so that's going to be something maybe interesting, maybe not. We'll see how it performs, but again, for now, I will say from the technical perspective, as if we continue to trade above this highlighted zone, this 109 point, let's round it up to 30, then yeah, I'll continue aiming to the upside. If we start falling below it again and we stay below it, not only like just a false breakout, but we also stay below it, now that's where, yeah, we could see maybe the sellers kind of picking up and driving this one back to the 21-day EMA. Gold, very quickly on that one. So yesterday we had a bit of a yeah, retracement, and look, the 1711 territory, the one that I spoke about previously, it didn't hold, so we can get rid of it. Now it's no longer needed. What's holding is the 1728 level right here. As you can see, today we saw a push towards that area. We got to hold up there. Now my question here is, can we see this retracement like that? So yeah, we violated that 1711, so we're ignoring it, but now we're not ignoring the 1728 zone. So if it somehow continues to provide resistance, then yep, another like this decline could be possible. If we do break this 1728 territory, then I'll go for this downside line taken from the high of the 8th of March. WTI oil, guys, very quickly on that one, and yeah, look at this. We have a hold up near that 90.58 zone. I talked about this level, and there we go. We have our little hold up. So let's see if we can actually get a reversal back to the downside here. At the moment, I'm gonna take a neutral stand in a way, or maybe even, let's say, very cautiously bearish, because we are still below all of the EMAs here in our daily chart, and we recently can see that the 21-day EMA has crossed the 100 and the 200-day EMAs, and yep, it seems like, yeah, maybe we could see this one, you know, drifting further south. However, we do not ignore the possibility of seeing some sort of spikes or something like that, something extraordinary happening. So hey, that's the market we're dealing with. So, but I would say if we do start pushing back above the 200-day EMA, then yeah, I'll consider a move a little bit higher here towards that 100-day EMA, or even above that. In order to get comfortable with the downside, guys, I would like to see a drop below that 85.74 territory right there, and then we could go from there. Now then, ETC USD, this is why I said to you yesterday, and I kept on talking about this when I said that, look, ETC somehow became my favorite crypto to watch, because at least it does something. Well, there we go. It did something. It ignored the whole kind of idea of what I said, what I was talking about when I was talking about and mentioning the descending triangle pattern. And instead, I said that, look, if it might not, you might ignore that, and that's why I say all the time we need a confirmation break first. And well, we didn't get that confirmation break here through this this key support zone. Instead, we had a pop, and well, look at this. I mean, that is quite a decent rally here. What I would say, 9%, something like that. No, sorry, 9%. No, it's like more of a, yeah, like a 30 something percent here. Up move here in one go. Great, okay, wonderful. Yeah, so let's see, where this can go further. Hopefully it can go to this upper side of the range that I've mentioned as well. So at the moment it seems that we're going to be considering that idea. I'm going to get rid of this downside line, no longer needed, and most importantly, we've pushed above that 38.37. If we stay above it, I'll continue aiming for that 45.31 level. AUD USD, guys, very quickly. So So yeah, still watching this one and keeping in mind that this might be seen as a head and shoulders pattern. We are breaking we broke the neckline. We're still trading below it. We're struggling to get back above it. So in a way, I'm still leaning towards the downside, especially if it falls below this little hurdle, this little 0.6771 hurdle. If it falls below this will confirm a forthcoming lower low, and we could then aim for that area near that 0.6680 zone. In terms of the upside, now previously I talked about this level, the 0.6904, but the further we go to the right, I think that we can now shift back to this 0.6854 territory right here. If we push back above it, then yeah, I'll go a little bit to the upside. AUD JPY, so we're still flirting with this barrier, this 95.75 territory. Look, we've pushed through it again, and we are failing to break through it again. So or sorry, not failing to break through it, but we're failing to stay above it. So if we manage to stay above this, then yeah, great, we'll go higher. If we don't, well, this could, you know, hang around here, and we'll just have to wait and see what's going to happen further. One thing I want to get rid of here is this downside line. I think that it's better to actually redraw it in another way, maybe actually capturing this this upside support line, tentative of course, taken from the low of the 12th of May, this medium term upside support line. So if we're looking for some lower levels, then probably now I would be looking at something maybe around here somewhere, this 94.70, oh sorry, 94.90 level, something like that, 94.90. If we do, because at the same time, on a break below this this hurdle, we could also drop below the 21-day EMA. Look, in general, if you want to be even more specific, that's the area that I would be looking at. So, but given that it's a little bit like too much, so that's why I will stick to this level, this this 94.90 and approximately around there, and I'm going to keep an eye on that 21-day EMA as well. USD JPY, so continues to push higher. Okay, everything's in line, everything's normal here. Yesterday, this is what I talked about recently, so I said that as long as we stay above this area, the 139.39, my next target is the 141, which we managed to reach. Look, now I'm just gonna play it dumb, and just gonna say that as long as we stay above this area, I'm gonna continue targeting higher levels, and my next target right now will be this 141 point maybe 50, and then 142. Now, why these numbers? Just basically because we don't have a clear area, you know, the clear target above. So I rather just stick to maybe these, like, you know, nice, beautiful numbers. Adjust my, you know, my positions accordingly. But most importantly, let's say, as long as it stays above this area, then yeah, I'll continue aiming higher. Now, the only thing is, of course, and you probably would, you know, some of you would agree here that, look, we might be overstretched here a little bit to the upside, so maybe a bit of a retracement first could be, you know, good, and then gonna go higher. So yes, that is correct. So that's why, for example, the other option is just to maybe wait for that retracement, see what's going to happen. For example, if we stay somewhere above this area, if we do, then yeah, I'll go to the upside again. If we don't, now that's where it could become quite exciting for a few more sellers. A USD CHF, so USD CHF, looking at this picture here, I would say, okay, we did get our retracement a little bit, so that's fine. What I talked about yesterday, I said that, look, we might see a further push north, and this is kind of what I was hoping for, but you know, given that we also have been quite overstretched to the upside, so that's why the market wants a little bit of a correction here, which is fine as well. I would say is if it drops again below the 0.9784 territory, then yeah, I'll go for this upside line taken from the low of the 11th of August. If we rebound from it, great. If we don't, then well, this could be a feast for the bears. If we do break this upside line, then yeah, we could go a little bit lower. Let me just put some arrows here. The safer option, of course, is to wait for a drop somewhere below this area, but okay, I mean, look, initially if we do break this upside line, I will aim for that 21-day EMA just to see if it provides any holdup or not. If that fails, then yes, certainly this could open the door towards lower levels. GBP USD, guys, just a quick update. So there we go, beautiful reversal yesterday, and look at this, what we're getting here. So we didn't really reach the 1.1414, but to be honest, look, I mean, I talked about this yesterday. I said that we might see maybe a bit of a retracement, but if it stays somewhere below this 1640 zone, something like that, then yeah, maybe another decline here could be possible. However, if you're not really comfortable with that level, then I would say you could keep an eye on this this downside line, so which is approximately near that hurdle. So maybe we could see a little overshoot here. So if this downside line somehow provides resistance, then yeah, another decline here could be possible. Now, so in terms of the upside, I would say, look, if we do push back above this 1.1760 zone, I would say this is where I'm going to get a little bit more excited with the upside. But until then, guys, all this, I'm just observing this. I mean, I'm watching. Yes, great. We're having a bit of a push here, a bit of a pump to the upside. Great. But can this, can this be sustained? Well, for me, let's say, like I said, I will consider, higher levels for later on if we do push back above this 1.1760 and we break that 21-day EMA. GBP CHF, so beautiful reversal. Look at this, a bit of a tease yesterday happened, and we drifted lower. We broke lower, and this is what I was talking about. I said that as long as we stay below this area, below that 1.1298, 85 area, approximately between those levels, then yeah, further declines could be possible. But there we go, we had a strong reversal back up, and now we're seeing a test of this downside line, this tentative downside resistance line taken from the high of the 9th of June. Can we break that? Well, even if we do, okay, that could be the first step, maybe towards some higher levels, but I would actually prefer to see a break through this area, through this 1.1410, 1.1421 levels, between those levels. At the same time, we would also climb above the 21-day EMA, and we could go further, further north here towards that 21-day EMA. But let's not rush into anything. Another thing that some of you are watching here, again, depending on your chart, maybe, just maybe, this could be seen as a potential kind of range here right now, because the index is currently sitting. If you want to consider that, that's absolutely fine. Just as always, of course, if you wait for that confirmation break, if you do like to trade kind of these breakouts, so don't rush into anything. If you're not comfortable in here, guys, that's absolutely fine. Just leave it and wait for, like I said, for a confirmation break through one of these areas. Euro GBP, so my least favorite pair, but hey, so far so good, I would say. It's somehow doing stuff that I'm kind of hoping it was going to do, but that doesn't happen very often with Euro GBP. But hey, we after found resistance near the 0.8678 level, so this is one of those levels that I was targeting. I said that, look, we might get a hold up, we might see a retracement. We're getting that retracement right now, so everything's kind of fine. Out of curiosity, I just want to quickly check what's the Fibonacci. Okay, so 23.6. So that's if we draw it this way. We can draw it, for example, from this rally, when the rally started. We can see that, yeah, we did get a hold up here near this 23.6. Now we're aiming for that 38.2, which is approximately near that 0.8585 level. That's what I'm going to be aiming for initially. If we get a hold up somewhere around here and then rebound, great, this could be working out nicely. However, if we draw it this way still, then maybe the 23.6 could be that one that that we need to be looking at here. Again, that's why I'm saying this Fibonacci in this situation, it's really a difficult one. I mean, let's keep it maybe this way because I have my level here, the 0.8511 at 50% retracement. So again, I'm gonna stick to this idea for now. I'm gonna keep an eye on that 0.8585 level. If we do rebound from it, great, we could go higher. If we fail and we start moving further south, then well, I'll aim for that 21-day EMA initially, which is, let's say, rising up very sharply, and then I'm gonna go from there. If it breaks the 21-day EMA, I'm gonna go lower. If it doesn't, yep, well, we could consider maybe a move, like I said, back to the upside here. And finally, EURUSD. So this one's also a roller coaster ride, and it's really not. I mean, the bulls are really trying to keep this one closer to that parity level. Okay, so yesterday we dropped below that 0.99 level right here. We dropped below that, yeah, the lowest point of August. Now I'm gonna keep an eye actually on the current lowest point of September. So that's roughly around that 0.9878 level. So that's gonna be my new level. If I wanna go lower, that's the level I'm gonna be aiming for. At the moment, I'm just going to observe this one because now even this 0.9952 level is no longer valid for me. What I'm going to do here, and actually I'm going to reuse this highlighted territory, mark this level right there. So if I want to go for some higher levels, I need to see a break of this 21-day EMA, and then we could go towards that downside line taken from the high of the 10th of February. In order to get even more excited, then yes, a break of this downside line is, of course, is needed. So if we do actually break this downside line, this could open the door towards higher levels. We could go back into those 101s, 102s, and 103s, and maybe even higher. So look, it could present itself with a nice opportunity. At the moment, I am just observing this one, not really doing much. But if it does drop below the 0.9878 level, well, this will confirm a forthcoming lower low. And well, it could open the door towards my next target. And let me just jump into a monthly chart. Not this one right there, but there we go. That's the one I'm looking for here, roughly around that 0.96 territory. That's what I'm going to be aiming for. Look, there is still room, for example, for the downside. There we could still end up maybe going towards the lowest point of 2000s here, where the euro dropped against the US dollar to the levels of 0.8229, something like that. So that's the low. Hey, let's see what's going to happen now. But again, overall, if you look at this doesn't really paint a very positive picture. Again, let's not rush into anything. Let's see what's going to happen here. Let's jump back into the daily. And like I said, if you're trying to predict the future here, I would say, okay, good luck. But again, I rather go from just what I have on the chart, and I rather go from the clear breakout, and then then we can slowly, step by step, not rushing into anything. We can aim for our targets. Okay, guys. I really hope you found it useful. Thank you very much for watching and listening. I really appreciate your views, your likes, your comments, guys. You cannot really imagine how much I appreciate that. So thank you very much I really thank you. Just to let you know that tomorrow will be the last Traders Espresso this week. So yep, tune in. There won't be any Traders Espresso on Thursday and Friday, but yeah, and then we'll resume on Monday. But yeah, tomorrow, join me at 6 o'clock GMT time. For now, have a wonderful trading day, guys. Stay safe, have your stop losses in place, and everything will be fantastic. Thank you very much, and bye-bye.